China has long been seen as an unstoppable economic powerhouse, but in recent years, its growth has started to slow down. Once achieving double-digit GDP growth, China is now struggling with lower growth rates. So why is this happening? There are several factors contributing to China's economic slowdown, and understanding these factors is crucial to seeing what's next for the country and the global economy. For decades, China's economy grew at an impressive rate, and it became the world's second-largest economy. However, recent data shows that China's GDP growth has fallen to below 5%, signaling a shift that could impact not just China, but the entire world. So what are the reasons behind this decline? Let's dive into some of the most significant factors that are shaping China's economic future. One of the major reasons China's economy is slowing down is the crisis in its property market. Real estate has been a driving force behind China's growth, contributing almost 30% of its GDP. For years, cities expanded rapidly with massive construction projects, and home prices soared. But this growth came with high levels of debt, especially among property developers. Companies like Evergrande took on huge amounts of debt to build properties that people couldn't always afford. When the real estate bubble started to burst, many developers couldn't pay back their loans, causing a financial crisis. This has left unfinished buildings, unpaid workers, and an overall loss of confidence in the housing market. The collapse of this sector is shaking the economy to its core, affecting not only the property market, but also industries like banking, manufacturing, and construction. Another factor behind China's economic slowdown is its aging population. China's population has been declining, and the country is now facing a demographic crisis. The one-child policy, which lasted for decades, has led to a shrinking workforce. As the population ages, there are fewer younger workers to drive economic growth. This demographic shift means there are fewer people contributing to the economy, and the country will have to spend more on healthcare and pensions. These factors combine to reduce productivity and slow economic growth. China's working-age population is shrinking, and this could limit its ability to grow its economy in the coming years. Youth unemployment is another major issue that is contributing to the slowdown. The country is facing a crisis among its young people, with over 20% of those between the ages of 16 and 24 unable to find jobs. Part of the problem is that the skills of young graduates don't always match the demands of the job market. Moreover, government crackdowns on industries like technology and private education have resulted in fewer job opportunities for young people. This lack of employment has caused frustration, and as a result, many young people are holding off on making big purchases, which has a negative effect on consumer spending. When young people aren't buying goods or services, the economy suffers, and businesses feel the impact. Furthermore, China's global exports are facing declining demand. For years, China has been the world's factory, exporting everything from electronics to clothing. But recently, global demand for Chinese goods has slowed down. Rising inflation, geopolitical tensions, and shifting supply chains have led many countries to look elsewhere for their goods. The China Plus One strategy, where companies diversify their supply chains by sourcing goods from countries like Vietnam and India, has also reduced China's dominance in global manufacturing. This decline in demand for Chinese products means less revenue for the country, further slowing its economy. Geopolitical tensions are also playing a role in China's economic troubles. The trade war with the United States, sanctions on Chinese technology companies, and growing distrust from other countries have made it harder for China to access global markets. As these tensions continue, China's ability to innovate and remain competitive in industries like technology is being challenged. The restrictions on access to vital technologies, like semiconductors, have hindered China's growth in high-tech sectors, and as a result, China's leadership is finding it harder to maintain its position as a global tech leader. On top of all of this, the Chinese government's crackdown on private businesses, especially in the technology and real estate sectors, has created an uncertain business environment. The Chinese government's actions have sent shockwaves through the private sector, with companies like Alibaba, Tencent, and others facing heavy fines and increased regulations. This has created a lack of confidence among investors, both domestic and international, and has made it harder for businesses to grow. When businesses are struggling to operate and innovate, it has a direct impact on the economy. The COVID-19 pandemic also played a significant role in slowing down China's economy. The strict lockdown measures, which were part of China's zero-COVID policy, led to major disruptions in the economy. Supply chains were paralyzed, small businesses were forced to shut down, and consumer confidence plummeted. Even though the government lifted restrictions, the recovery has been slow, and businesses are still trying to regain their footing. Consumer spending has not fully recovered, and many industries are still trying to bounce back from the effects of the pandemic. China's rising debt levels are another major concern. Local governments, corporations, and even households have accumulated massive amounts of debt over the years. While debt has been used to fuel growth, it's now becoming unsustainable. Local governments have borrowed heavily to finance infrastructure projects, but many of these projects are not generating enough income to pay back the loans. Companies are also struggling with their debt, especially in industries like real estate, where the financial situation is dire. This rising debt puts even more strain on the economy and reduces the government's ability to invest in future growth. Lastly, China is facing significant environmental challenges, which are further slowing economic growth. The country has experienced extreme weather conditions in recent years, including record heat waves and droughts. These environmental challenges are impacting key industries like agriculture, hydropower, and manufacturing, driving up costs and reducing productivity. The impact of climate change is undeniable, and it adds another layer of complexity to China's economic situation. So where does China go from here? The Chinese government is fully aware of these challenges and is taking steps to address them. They are focusing on boosting domestic consumption, encouraging innovation, and attracting foreign investment. However, many of these issues, like the aging population and high levels of debt, will take years to resolve. The country is also trying to shift from low-cost manufacturing to high-tech industries, with investments in green energy, artificial intelligence, and other advanced technologies. This shift will take time, but it's a step in the right direction if China hopes to remain competitive in the global economy. The slowdown in China's economy is a critical issue, not just for China, but for the world. As the second largest economy in the world, China's struggles have ripple effects that impact global markets. Slower economic growth means less demand for goods, which affects trading partners across the world. It could also affect global supply chains, as China is a key player in manufacturing and exports. In conclusion, while China's economy is facing significant challenges, its ability to adapt and innovate will determine its future. Will it be able to overcome these issues and return to strong growth, or will it enter a period of prolonged stagnation? Only time will tell, but the decisions made now will shape China's future and the future of the global economy.